Hey everybody, Tristan from MyStockLife here. Hope you're having a wonderful day. I really wanted to come to you guys today with some really big information happening on a Bloomberg article talking about meme stocks. Before we get started though, make sure you smash that subscribe button and keep the likes coming in. It really helps with the algorithm. So without further ado, we're actually gonna start jumping into this meme stock article posted by Bloomberg actually just yesterday. So it reads at the top here, as meme stock mania fizzles, Wall Street sees big reckoning. They kind of say big reckoning, kind of like the hedge funds are waiting for their turn back at bat and get back on offense. And I kind of see it in that same way, but I'm not too sure that it's kind of like a revenge type of play that they're trying to posterize it here as. But let's go ahead and get into it. The day trading Reddit crowd turned the first quarter of 2021 into one of the wildest periods of stock market mania in modern history. Books, plural, will undoubtedly be dedicated to the topic in years to come. But after these small-time speculators banded together to drive up dozens of obscure stocks by hundreds or even thousands of %, in the process burned a few hedge fund barons betting on declines, that is something that is very true. It was very much a revenge play on the retail traders of Reddit to go ahead and go after them. And I haven't been on Wall Street Bets in a little bit. I'm not too familiar with what's going on because after the GameStop explosion, these guys were just going crazy, and all these bots started coming up, and it was GME, TARDs, and all this extra stuff, and it was really just unenjoyable entertainment. And I pulled myself out of the content there, but we will probably jump into a little bit later with you guys today. But back to the article. An index that tracks 37 of the most popular meme stocks, 37 of the 50 that Robinhood markets banned clients from trading during the height of the frenzy, is essentially unchanged over the past 2 months after soaring nearly 150% in January. So I actually have a list pulled up here we're actually going to take a look at. This is a list of Robinhood stocks that was actually banned, those 50 stocks that they either put restrictions on or completely banned altogether for that short period of time. We got American Airlines, we got First Majestic Silver, AMC, BlackBerry, Bed Bath & Beyond, GameStop, of course, Cost, Moderna. These are some really big names. I didn't realize how like monumental some of these names are, like Nokia, Moderna, Cost. I wasn't really involved in Robinhood. I don't trade Robinhood. I trade TD Ameritrade. But seeing some of these names just actually typed out, like dang, they American Airlines, AMC. It really goes to show that they were actually scared for their britches over there. They were really worried about it. So back to the article here. It's crazy that they banned all of these. Like you see right here, either one share or 5 new shares. It's really ridiculous. Our option sniper, our boy Nadeem, he he made a good little bit of money on that. But you remember him talking about it in the trade house here about, dude, what the heck is going on? I can only get 1 new share. I could only exit my position, which looking back on it now, it's kind of outrageous. It's kind of outlandish. Back to the article. Talking to Wall Street veterans, and they'll tell you that this flatlining is the beginning of what will be an inexorable move downward in these stocks. It's not so much about the poor fundamentals of the company, at least not in the short term. And that's originally why I didn't invest in GameStop. Nadeem made a call out for Palantir and GameStop in the same message on Discord. If you're not in the Discord, definitely go check out our premium Discord. But he made a call out for GameStop, and I was looking at the fundamentals like, I don't like GameStop. It's a brick and mortar company. They have to have employees on deck. It's not something that's really geared for the future with the malls that are closing and all of the big industries that are shutting down because of the brand new Amazon waves and things and the such of that. I just saw it as a terrible financial on the fundamental end, and I think that they're saying the same thing here. But let's go ahead and read further. The day trading zealots have shown a surprising ability to ignore these facts. They have. They absolutely have. I remember so many times Nadeem was telling me like, no, they're making a restructuring play. They're restructuring for the e-commerce section. I'm like, dude, the PS5, one of the big reasons why I didn't invest in GameStop originally was because of the PS5. They have an all digital version. That means you don't have to go purchase a physical disc, whether that be delivered to your house or go to Walmart or Best Buy or any of these retailers to go pick up the copy, and you don't even have the option to. So when I knew about this in the PS5, I was like, dude, GameStop doesn't have a chance. Lo and behold, I could have made a few extra thousands, if not hundreds of thousands, off of the plays, and so it be. It's more that as the pandemic slowly winds down and the economy starts to open up, many of them will leave their homes and start going back into offices and out to restaurants and embarking on trips near and far. As they do this, they may stop obsessing about the Robinhood accounts. That's a may. When you get touched with the investing bug. When you get hit with the investing bug, it's really hard to let it go. A lot of people either made money or lost money in the markets with the retail investments or the stimulus investors, and it's kind of addicting. I don't really see it on that end. I want to maybe slow these guys down a little bit and say, hey, maybe it's more than just not being at the office. It's a lot more of just wanting more financial freedom for yourself, more control over where you're located and how you're working, and so many steps that entice me to get into the stock trading industry. But go ahead and just getting more into it. People are going to be doing other things, said Matt Maley, chief market strategist at Miller Tabak and Company. There will be a big reckoning at some point. He said there's no question in his mind. Okay, Mr. Matt Maley. Well, I'll take you on that. He's basically saying the hedge funds are going to be shorting like crazy. They're going to get back to their shorting ways, and I think that they might get burned again. I think Wall Street Bets, even though I haven't been on in a long time, they're on top of this. They're watching this like hawks, and they're waiting for another opportunity to make another run go crazy, whether it be Express or whether it be Rocket or whether it be GameStop. I think that they're on top of it, and I don't really agree with what he's saying here. Of course, the Wall Street Bet set has, broadly speaking, misread the Reddit crowd for weeks earlier this quarter, and it's possible their analysis is wrong again. Preliminary data, though, suggests that they're right. If you see here, we have I think it's kind of like an equal weight basket of 37 popular meme stocks, and they're kind of going sideways. I have a couple of these stocks pulled up here. If we go over to GME, you see right here in January, the original massive buying volume. It scrapes all the way up to the 400 range, and it comes back down, drops all the way back down to like the 38, 40 range right here, and then it scrapes back up, and now it's showing at the 191. That's more than I think that's about 150. That's more than 150%. We got AMC right here showing you with another scrape up. T actually called out. It was so funny. He called out leaps on AMC because of the reopening play, and he would have killed it. Like $5 leaps on AMC were going for like $1.50 at the time. I can't even imagine what they're going for right now. But we got BlackBerry right here. They're seeing about like the 150 range from where they started right here. Let's see, January. Yeah. Oh, I mean, even less than 150. So I mean, an equal basket. We're gonna be looking at costs here. I don't see them dropping that drastically though. I don't see them. I feel like people have been holding and they're gonna continue to hold. Yeah, they have like apes together strong on Reddit. I see it in, I disagree with this article. I do say, I know that they kind of hedged their bets by saying that Wall Street was wrong in the first couple weeks of the quarter, and I would agree with that. I think that once the reopening happens, it's just going to reinvigorate people to get back into investing. I think that investing is a lot deeper than just being stuck at home. I think it's that people really want a different life for themselves, and this 9-to-5 lifestyle is really going out the window, and quarantine and the pandemic is really just a fast transgression of that. It's unveiling a lot of things that were already there. So going through this a little bit more, recent reports suggested that vaccinated Americans, and being 1 in 4 Americans is now vaccinated, that Google searches for Google Flights has reached a peak popularity of 100 this week, 100 score this week, and that less and less people are searching for stock trading and investing, which makes sense. It does make sense. The more time that you're looking for outside engagement away from your phone, your screen, which you've been stuck in for so long, if you get the vaccination, I do see that being a valid point. But once again, trading is deeper. Trading is deeper than getting away from it. It's something that is ingrained inside of you. Once you understand, looking for an undervalued stock and looking to go overvalued and trying to create value inside of that, it's so much deeper than just, I'm at home bored. It's so much deeper than that. So looking here, video game retailer GameStop Corp became the poster child of retail investors. Yeah, they definitely did, but when it got into GameStop and when it got into Wall Street Bets, it became a lifestyle. It really became a lifestyle for people. It was surged by GameStop, but it became so much bigger than GameStop. And they're showing right here, it's about 191. And then it goes on to tell more. They're talking about, reckoning that Wall Street is going to be taking a big swing back at retail investors and knocking these share prices back down. I personally disagree with it. I think that these are going to still continue to hold weight. I think GameStop still has a lot of run inside of it. I think that, you know, the second wave of retail investment is going to be coming around the corner. But let me know what you guys think in the comments. I really want to get your opinion. I'm going to be doing more of these market news for you guys. I think this is a really interesting article and how it relates to what we have going on inside of the market today. And let me know what you guys think in the comments. Hit the like button, hit the subscribe button. I absolutely love you guys. I'm going to be coming more with content like this, and I hope you guys have a wonderful day. My stock life or no life, baby.